What's up, world? Welcome back to another episode of the MITM podcast, where we unlock success daily by journeying through the 6 pillars. I'm your host, Ty Aarons, and today we're delving into a topic that has a significant impact on our financial future: understanding different investment options and strategy. With that being said, run the intro.
Caught up in them bright lights, lusting for shiny things that's golden. Everything ain't always what it seems, let it soak in. Chasing my dreams, coming apart at my seams. Best believe that the money is the motive.
All right. Welcome back to another episode of the MITM podcast. Investing wisely is a fundamental pillar of financial security and growth. Whether you're just starting or looking to diversify your investment portfolio, understanding the various options and strategies is key. So let's jump right into it with some tangible tips to help you navigate the world of investments. Tip number 1, you need to know your risk tolerance. Okay, begin by assessing your risk tolerance. Understand how comfortable you are with fluctuations in the value of your investments. Are you risk averse and prefer stable returns, or are you willing to take on more risk for potentially higher returns? Your risk tolerance will guide your investment choices. And something very interesting that most people don't realize is that your risk tolerance will shift as your knowledge around investments shift. Okay, you will probably have a substantially larger, have a larger tolerance to risk the more that you understand that specific investment that you're getting into. But that's because you're technically lowering your risk by having that deeper understanding. Okay, you know your margin of safety, you know your payback time, you know all these different aspects of the investment, which will make your risk tolerance lower. Okay. Tip number 2, explore different investment vehicles. Familiarize yourself with different investment vehicles. There's stocks, there's bonds, there's mutual funds, ETFs, which are exchange traded funds. There's real estate, there's commodities. There's so much more. Now, each has its risk and return profile. Now, stocks offer high returns, but can come with high risks, while bonds are generally more stable, but offer low returns. Diversification across these vehicles can reduce risks and help you balance out your portfolio. Tip number 3, understand asset allocation. Learn about asset allocation. It's a strategy that involves dividing your investments across different asset classes based on your risk tolerance and financial goals. Striking the right balance between stocks, bonds, and other assets can help you achieve your financial objectives while managing risks. Okay, this is just to say, don't put all of your eggs in one basket. All right, if you're interested in crypto, don't put it all in crypto. If you're interested in putting your money in life insurance, don't put it all in life insurance. Okay, but get a little bit of gold, get a little bit of stocks, a little bit of bonds, so that when the market does make these corrections, like it always does, you're not gonna be in a negative place because all your eggs are just in one place. Tip number 4, research and educate yourself. Okay, invest time in educating yourself on investments. Read books, take online courses, follow reputable financial news sources. The more you understand about investment options and the market dynamics, the better equipped you'll be to make informed decisions about your investments. Right? They say that you should start investing in things that you already understand. Okay, if you're a sneakerhead, then hey, exploring the sneaker world may make sense for you. You already know that the new CEO is hired or fired. You know when the new drops are happening. You know all of these different things about the company, and you probably would be very excited learning more about, for example, Nike or Adidas, and going deeper into understanding the companies, so that when you make an investment choice, you have a wiser decision that can be made. Okay. Tip number 5, consider a long-term approach. Okay. Embrace a long-term investment perspective. The stock market, for example, tends to trend upward over extended periods. Instead of trying to time the market or make short-term gains, focus on a strategy that aligns with your long-term financial goals, such as retirement or funding education. Tip number 6, seek professional guidance. Don't hesitate to seek guidance from a financial advisor or investment professional. A qualified advisor can provide insights and expertise to help you develop a customized investment strategy based on your financial situation, goals, and risk tolerance. Now that brings us to the end of today's episode of the MITM podcast. Remember, understanding different investment options and strategies is a critical step towards securing your financial future. Know your risk tolerance. Explore various investment vehicles. Grasp asset allocation. Educate yourself. Adopt a long-term approach and consider seeking professional guidance. Join me next time as we continue exploring matters that shape our lives. Until then, stay informed and empowered in your financial decisions, and I will see you tomorrow. Peace.
Give them that creme de la creme whenever I spit that hot shit. Ain't no lose or draw when it's the only option. Till I'm balling like Stockton, I'm locked in. Researching the best stock tips, fuck gossip unless it makes a profit.